Hey there, Mike Riley with Gaining Altitude Financial, and today we're going to talk a little bit about permanent insurance. I do a lot of videos about critical illness, disability, and term insurance, and permanent insurance is another financial solution which fits with, not everybody, but people that are looking to start to an investment program and to diversify beyond just RSPs and TFSAs, as well as understanding that down the road when they die, that there's going to be some need for life insurance for final expenses, taxation, charitable giving, creating a legacy for the family. And of course, the younger you are and the healthier you are, the lower the cost of the premiums are and the more time that the policy has to build. So this was a case I worked on recently. I've changed the numbers a little bit to make the math a little simpler. But this individual, a 30-year-old single mom, we put together a plan that had plenty of term insurance so that if she died that there would be money for raising children. But she also understood that she wanted to have some insurance in the future, and it made more sense to do it now. So the lowest death benefit amount that we could find was $25,000. As a healthy, non-smoking 30-year-old female, the premiums were $32 a month. So it certainly fit within her budget. And we set it up so that it would pay in 20 years. So at the end of 20 years, the policy would be fully paid up, no more premiums. In the early years, there's not a lot of growth because you're paying for that cost of insurance. And that growth comes from dividends that are being paid by the insurance company. Insurance companies are very good at making money, and they pass some of that back to the policyholders. And that dividend buys another little slice of insurance. It sits on top of the policy, so it starts to grow. The next year, dividend gets paid, more death benefit is on top. And eventually, as you can see, that death benefit grows. So even after year 20, when the premiums are no longer being paid, it still continues to grow. By age 60, the death benefit was around $62,000. By age 80, it was over $100,000. By age 100, the death benefit was up to $131,000. So that's pretty good growth from something that was $25,000, only paid for 20 years. And if you're someone that understands that things are going to be more expensive in the future, this is something that keeps pace, beats inflation, and now there's more money at the end when she dies to take care of any end-of-life needs as well as gifts and charitable. The other thing is that cash value that gets paid to the dividend also grows inside, tax sheltered. And by age 70, we're looking at about $28,000. By age 80, it was just under $50,000. By age 90, we're at about $84,000, $85,000. And then it caps out just over $125,000. So that also grows. The cool thing about the permanent insurance, and she bought this as a death solution, but at any point during the lifetime of this policy, she can access that cash through either borrowing from herself or assigning it as a loan. And the dividend still gets paid the next year. There's no tax impact to that. It's another good source of liquidity and emergency funding. If she died while the money was out, the death benefit gets paid out minus whatever the liability is. So here's just one more area where in a good financial plan, we found that using $32 a month, we took care of a long-term need for insurance as well as increasing the access to liquid cash as another tax-sheltered tool. So I hope you found that interesting. If you'd like to know if this sort of solution would work for you, maybe the same amount of money, maybe more, depending on your age, we can talk about where that fits in with your plan for permanent insurance. So looking forward to answering those questions. That's Mike Riley with Gaining Altitude Financial, where the sky is the limit.